Fire video today. They all fire. But this one will probably one that we'll watch a couple of times. It's an A plus setup on the GBPUSD. So just to set the stage, it starts with the higher time frame narrative. Looking at the monthly chart, balanced price range. So when price goes down and immediately comes up, that's balanced, leaning into the order block as well. And you can see price has been respecting that, pushing upwards. Let's go to the 1 weekly. Before that, you can see here the order block, fair value gap, something we're leading up into. Apologies, had the fan on, I forgot to turn it off before I started the video. Let's go to the 1 week. One weekly time frame. You can see the high, current drawn liquidity. We pushed up, opened a fair value gap, pushed up, retraced, opened a fair value gap, order block, then another order block. It's gonna put on the annotations now. So what we just illustrated, the fair value gap with the order block there. So let's go down to the daily and see how that looks like. On the daily time frame, we'll speak on this divergence shortly. On the daily time frame, you can see the order block. This was yesterday, Tuesday. Closed down, closed up like that. Then today, of course, is going to be a movie. Go down to the 4 hour. And you can see price. Here's that weekly order block. There's that weekly fair value gap. Let's go to the 1 hour. One hour time frame. Just gonna put a fib over this. Put a fib over this. Price traded down to the OTE level. Put the fair value gap there just to illustrate. Fair value gap as well. So we have the multiple confluences stacking up. Weekly order block. Price respecting the weekly fair value gap. OTE. Order block. Or not order block, sorry. The fair value gap, which also couples with the hourly order block. I'm just gonna remove the fib. As you can see, it's an OTE. Let me just write down the reasons so far. See the order block there? Price yesterday, doji. Well, we printed a bullish candle yesterday. Let's go down to the 4 hour. Let's go down to the 1 hour. Remember, it's an OTE, remember? And then the next confluence, quarterly theory. That was a bomb going off. If you don't know, now you know. Quarter 3, right? Quarter 3, which is the high probability or best time to trade. Q3's Q3. So this is London session. I mean, what's this? It's the day of week. So Q3 day of week. So Wednesday, right? We're dividing the week into 4 quarters: Monday, Tuesday, Wednesday, Thursday. Q1 is Monday, Q2 is Tuesday, Q3 is Wednesday, which is today, right? As you can see, Q1 we had the accumulation, Q2 we had the manipulation, Q3 we're having the distribution. Tomorrow we can either have the continuation or we can have the reversal of the trend. But from where I'm sitting, at least for now, we can assume bullish movement until we pierce that double top there. So I'll still be looking for an opportunity to enter the trade and ride it up there. But anyway, back to business. Q3 day of week, right? And then also we subdividing the day into the 4 quarters. So Q3 of Wednesday, which is New York AM session, 6 to 12, right? If you want to further subdivide that, it's 6 to 7:30. Let me just go to the 30-minute chart. I'm gonna even subdivide that just to take a look, see at the confluences. So you see, it's the week. or day of week, time of day, and then within that time of day you can like subdivide it into further sessions, as you can see here as well, you know. So it's 6 to 7:30, that's Q1. 7:30 to 9, that's Q2. So it came at 9 to 10:30, that's the best time. 9 to 10:30, that's your Q2. 30-minute chart here. So if I put it 7:30, Alt V, 7:30, Alt V, oops, I was pressing Command, then 9, 10:30, 12. So we have the quarters of that particular. No, what is this? Python, not today. Doing a video. So quarter 1, quarter 2, we had accumulation. As you can see, we had the manipulation. Let me just like mark this down so everyone can see. Q1, Q2, Q3, then Q4. Right, so you can see here we had some consolidation. Quarter 1, we had manipulation in quarter 2, which would be the best time to enter the trade. We had a run on stops. I'm just gonna mark that out. The sell side. Really gonna dive in on this one, man. No cap. So we ran the sell side in Q2, and then Q3 we had the distribution, and then Q4 we had the continuation. Then the rest is history, you know. The rest is history. So we had a bullish, where's that 1H? So as you can see, we had a bullish power of 3. Session bias was a bullish power of 3. Man, too many confluences today. Way too many confluences today. High quality A+ setup today. Just gonna mark that down. I didn't even speak on my bullish H4 draw on liquidity. So quickly, let's just go to the 4H time frame. We're done with those. Let's delete you. Okay, so you can see here, while price was still down there, we have the double liquidity resting above there, and of course the high as per the weekly chart. So we have a bullish weekly, that's the high, and 4 hourly draw on liquidity. Okay, back to the 1 hour. And then to give even more confluence, had a red folder news event. It was the CPI today, and it was lower than expected. Then on top of that, I'm gonna give you all another confluence. SMT. That is divergence. Divergence from what, you may ask? I'll tell you divergence from what. Pardon the ridiculous amount of tabs. SMT. What is that chart I was looking at? Alright, cool. SMT. I'm gonna leave the pound here. 1 hour. I'm gonna put euro. One hour. I'm gonna put the DXY. Maximize the screen. And as you can see, SMT. We took liquidity on the DXY, setting the stage up for a bearish movement. But low key, if you look at it, we sort of have a market maker sell model going on here on the DXY. Let me just make it a bit larger so we can take a look at it. Okay, just gonna take your attention to this here, this price action. As you can see, price took out that liquidity and began to displace to the downside, leaving this open for price to come back to rebalance. Just gonna mark out the order block there, make that a bit bold. So that's the order block. As you can see, the fair value gap as well over there, essentially a breaker block also. High, low, high, low. So high probability sell area. Just put that like so. And then we look to the other side of the chart. You can see the order block is, of course, Let me rather just do this actually. Okay, so the order block there. You can see we hit it, took liquidity, hit it, proceed to sell off. Why I say we are looking at a market maker model there. See this consolidation. Okay, this is our original consolidation there. Cool, original consolidation. We have liquidity resting beneath it. We look or anticipate price to crash below that original consolidation. We have our first stage accumulation there. Get our second stage accumulation over there. And then we get our smart money reversal, and then we begin to sell off. So yeah, I'm looking at price to crash below here, or to sweep below this area. Check, this could be like the OG consolidation. First stage, second stage, you know. But yeah, as it currently stands, DXY is still gonna push lower. Had the market makers, this is the buy side of the curve, this is the sell side of the curve. So I'm looking at price to retrace and use these areas here as maybe a step ladder or something to move further. But that's that with the DXY. We can then take a look at the euro and the pound. Pound much stronger than the euro, and it has way more confluences. SMT, bearish DXY. Just gonna confirm that CPI. Yes, so the CPI year on year for February was expected to come out at 3.5%, but it came out at 3.4%. Lots of confluences. Lots and lots and lots of confluences. It's just an A+ setup, man. We have the higher time frame narrative. Supported by the red folder news event. Looks like Tuesday was the low of the week. can look here. First quarter of the week, we accumulated, right? We accumulated there. Just consolidation, consolidation, consolidation. Put that there. What did you do for Q2 of the week or Tuesday? Price went manipulated to the downside, right? It opened up, printed a low, and then closed up above again. That's what made that wick, or like, you know, that let me just go to the daily. That's this candle here. I'm just gonna remove that SMT thing since we know what it is. That's this candle here, right? 1 hour. Let's look what we did today. Today we distributed. So OTE, got that OTE entry during Q3 of the day. That would have been the best time to make the purchase. After we ran stops on a lower time frame, you know. This is the 5 minute. That is at 9:40. Low. Accumulation, manipulation, and distribution. So M5, power of 3. Fair value gap entry there. This is a balanced price range actually. Balanced price range. Hit that. Respecting the midway point of this fair value gap over there. I mean that order block. Let me just show you. So that red line is the halfway point of this. Can see wick, wick, wick. Let's see how that looks like on the 15 minute. Can see 15 minutes an order block. Wicking, wicking, wicking. You know? It's just layered on top of each other. Layered on top of each other. So run on stops. Price shot up. And yeah, that came in. You know? 1 hour. During Q3 of the week's Q3. I anticipate tomorrow will either reverse or continue the... Now we'll probably reverse though. Get a retracement into this area. That's what I'm looking to make my next buy. I just want to buy the order block. Let's go to the 4H. Yeah, it's a 4 hourly order block. That's what I'm looking to make my entry tomorrow. Or price could go, that's a balanced price range with an order block there. I'm not expecting price to go lower than this. See how many pips that is. 50 pips. 50. Come back, go back to there. Not a bad trade at all. We'll see what happens tomorrow. But as you can see, we have a ton of confluences. A plethora of confluences. A plethora of these confluences. Just go to the 1 hour. So we have the weekly bullish power of 3. We have the accumulation on Monday, the manipulation on Tuesday, and we're seeing the distribution today on Wednesday. Have a bullish weekly / 4 hour draw on liquidity. The 4 hour draw on liquidity is this relative equal highs. The weekly draw on liquidity is this high over here as per the weekly chart. You can see there. We are currently down here. Price is making its way. Oh, sorry, my apologies. That's the wrong one. This high here. Price is here currently making its way up to that high there. So weekly draw on liquidity on the 4 hour time frame. We can even see the hourly. This is our draw on liquidity. Bullish, pulling price up. We know which way it's going to lead to, so then we'll work our way towards refining an entry. But as long as we have the direction, that's basically 80% of the work done. We had a bullish candle printed the previous day. Let's go to the daily chart. You see this candle right here? That just screams buys. It just screams bullish. Then on the daily time frame, we have an order block there. So this consecutive down close candles create an order block. As you can see, we respected that. That's also, this delineates a weekly order block level as well. Traded into it, bounced up, respecting it nicely. It's Q3. It's Q3. High probability trade day of the week. We took the trade, or the entry opportunity presented itself during the New York AM session. Very beautiful. Session bias is bullish. Even we showed the breakdown prior of the session itself. We saw accumulation, manipulation, and then distribution within the AM session of the New York session. We had red folder news, even though it was earlier on during during the London. We'll go to the 15-minute quickly. Had that manipulation during London. But then it was clear. and of course it's an OTE on the hourly time frame. So a lot of confluences stacking on top of each other. This is an A plus setup. Very A plus setup. So I hope you'll be served well by this video. I just had to record it. There's too much gold in it at once that I couldn't just pass it by. Thank God for the skill.